Hello, everyone, and excuse me. Welcome to our second session this afternoon. I know some of you have just joined us for the Forex session about 10 minutes ago. So if you were at that one, nice to see you here as well. Some of you didn't and are joining us for the first time, but it doesn't matter. You're all very, very welcome. We're delighted to be back with you, myself and David, who's sitting behind me for the start of this new trading year. And it certainly has started with a bit of a bang. But before we start, as always, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. I know, as I said, we've just finished with the focus on Forex, and in this session we are going to look at stocks. We're actually going to look at ETFs as well. I've got all sorts of things to share with you in this session, but of course everything starts from the premise of volume price analysis, which is the relationship between the price action and the volume that we see on the screen, really to tell us not just what is happening at the moment, what has happened, but much more important is what is going to be happening next. And the concepts for the methodology can be found in the book that is on Amazon. There are other books that have led on from there. There's one specifically for Forex. There's also a crypto one. There's a binary options one. But there's also a book, a companion book, which is just examples. It's about 200 worked examples for stocks. It's got some commodities and it's got some indices as well. What we're going to be looking at is we are going to be looking at the charts through the prism of VPA, but also with we also use our own proprietary indicators. These are available for quantum trading. I've got NinjaTrader today. I'm not sure which platform David is going to be using, but essentially, oh, he's got all of them. There we are. But essentially, the indicators are available for MT45, Ninja, TradingView, and TradeStation. So you can find more information at quantumtrading.com. Right. Where to start? First of all, what I would say is obviously it's the start of the new trading year. Clearly, we are in earnings season, and I wouldn't say we start with a blank slate, as it were. We've kind of carry over from the Santa rally. The Santa rally actually finally got underway. It took, it kind of got stuck in the snow last year, but I think it was on just before Christmas and the 27th. So, and certainly Monday certainly started with a bit of a bang, as we could see if you were on the Nasdaq or the QQQ. I think a really nice big sort of quite healthy hammer candle, and we'll look at that as well. But because it's the start of the new trading year, it's really a good place to start is to see what has been the sector performances. Those of you who've come along to these sessions before will know when we talked about how to find stocks to trade, and one of the things we suggest is, clearly we do filters on individual stocks, but it's always useful, as I said, at this time of year, just see what happened last year, which sectors actually came up top, or which really didn't do very much, and which were at the bottom, because we are moving into another environment in the sense that in terms of inflation, we've had the CPI. I don't believe we have any other key pieces of news this afternoon. Those of you, if you've had a look on your calendars, you will see that we've had this is the CPI. This is not the Fed's metric, I have to say. The Fed's preferred metric is the PCE. Nevertheless, it is, you're seeing figures here, 7%, 5.5, that's slightly lower. The inflation rate, the core inflation rate, well, it's really hardly, it's hardly to go out and, put the bunting out on that number. These numbers haven't been around for some considerable time. And given that all the central banks have been praying for, inflation of only 2%, sometimes it's careful for what you wish for, but it is not the preferred metric. Now, these numbers came in and markets have actually gone up, and you say, well, hold on, good news, bad news, market goes up, good news, markets go down. And it's a case of, well, it was kind of almost factored in. There's been talk about, well, 7, it was an expected number. If it had been really bad, if it had been a double figures, then we would have, seriously, the markets would have had some serious worries. So fundamental releases, you have to interpret them in a slightly more nuanced way. It's not binary. It's not, a bad news, a bad reaction, good news, good reaction. And the other thing, of course, is to look at is what the VIX is doing. What is the fear index saying? Well, it's under 20. And what we've said all along in all our webinars from last year, the kind of benchmark figure, the kind of tipping point figure is 20, maybe even 25. And once it starts going below 20, the market is still bullish. Now, I had a very interesting question on my Twitter feed, and somebody said, oh, they saw the hammer candle that came in on the Nasdaq, and you can and the QQQ, and there was a decent amount of volume. So who's actually buying? Because there's if you look at the insider figures, I get the insider numbers now of who's selling and who's buying, and I tell you, it's been like 50 selling and 5 buying. So who's actually these are individuals, these are executives of companies and what have you. Well, one group, one part of that buying is actually stock buybacks, and I wouldn't say a lot, but a percentage of the growth in stocks. Obviously, there's more participation and et cetera, but it's actually been companies buying back their own stocks, which is obviously, pushes it up. Everyone sees it's going up. And the reason they've been able to do that is the liquidity, is the price, it's the money that's been available from the banks. Because what the banks were tasked to do after the financial crisis was, first of all, they had to be stabilized, and then, they wanted some growth into the economy, and there has been, to start lending this money out. But this money that's been lent has not, to be honest, hasn't gone in the direction that I personally think should have done. And I can only give you an example of this. I read somewhere someone who had a small business, and I think it was in America, it's a hair salon, and doing very well, wanted to expand. And say, oh great, there's all this, this encouraging, I borrow money, buys cheap money that's around, interest rates are very low. But when they went, I don't know if it was a man or a woman, they went to the bank and they were quoted some ridiculous interest rate. And if you think about it, last year, if you were using a credit card, you think of what you were charged on your credit card, and you think, hold on. So this is where the kind of inequality has come, and personally, I think it's going to cause an awful lot of social unrest if it hasn't done so already. So it's been a very uneven growth trajectory, and it all depends where you have been on the social scale. I'm not making a political point. I'm merely stating a fact. And what has also happened since we started in this business, the difference in CEO and executive pay and from your average Joe, there was a gap. You would expect that, your performance paid, but that gap is like vast now, average wages, and people turn around and look, and now you've got inflation in the mix, and we've had a pandemic. You only have to look back in history, and I tell you, the world is changing, and for certain sections of society, it's going to come as a bit of a shock. But, more of that as we go along. Right, back to sectors. What were the best performing sectors last year? What was the worst performing sector last year? And given this new environment that we're going to be in, is there, can we look at sectors to maybe tell us you know, maybe that's where we should be focusing in terms of looking for you know, trades, investments, etc. And 2020, 2021, 2020, you saw energy was right at the bottom. In fact, it took the bottom spot, 18, 19 and 20. Then last year, bang, it came up top. The worst performing sector was utilities. Now, utilities are like defensive stocks. You know, they're you know, gas bills, electricity bills. They tend to be cash rich companies, but they're not terribly sexy. You know, they don't have, their growth is, they're a cash cow. You know, that's what they're seen at. And you would think, now maybe that is, so when you're looking for, you know, you're reviewing, saying, well, you know, what am I going to think of trading this year? Well, look at the sectors. You know, maybe the worst performing sector might be the best performing sector this year. And in fact, even, you know, I don't know, we're only a couple of weeks into the new trading year, so it's difficult to tell. But the top sectors so far this year, interestingly, are now, were the top three were the worst three last year. So you have financials, real estate, and energy. Now, you could say with real estate, why is real estate coming up here? And real estate is quite interesting in terms of cycles, in that when the stock market, if we do have a major correction this year, not, you know, not just pullbacks and then going back into, you know, primary trend, as it were, real estate is a bit of a lag, because people take their money out of stocks and they think, oh, I really want to put it somewhere where it's safe, in inverted commas. They go into treasuries, obviously, but property is always seen as safe. But then if interest rates go up, because the Fed is doing what it's supposed to do, then mortgages become more expensive. So you can actually see this lag between stocks and real estate. Now, a lot of what I'm saying at the moment, a lot of this research, etc., has really come about. As you know, David and I, we've talked about it last year, but we are working really, really hard, which is why we haven't started as soon as we normally do in the new year, and that is we are working on the trading, the stock trading, the stock program. I'm not going to say trading, I'm going to say the stock program. And it's been absolutely fascinating, because it's so very different now. We have so many more instruments. We've been looking at ETFs much more closely. We've been looking at the bond market again, from a slightly different perspective from the bond market that we, you know, presented in the forex market. You know, you win this business, you really never stop learning. And with regard to sectors, of course, you can you don't have to trade individual stocks. You can trade the sectors. Now, if you want to find out what the sectors are and what they're actually doing at the moment, CNBC, these are the symbols and tickers. And if we go to the My Ninja Trader, let's just put up let's have a look. And there's all sorts of things we can do with sectors, with the individual, you know, if you do particularly want a particular stock, either you want to trade it via options, or you want to trade it fractional shares, or you want to trade it directly. However, you know, it's always best to check out what it's doing in its sector. Is it one of the top stocks? Is it outperforming the sector? How is that sector, you know, what percentage of that sector does it represent? And that's one of the other things we've been looking at with the stock program, is how sectors and indices are created. You know, they're either market cap, or they're price weighted, or they're equal weighted, and they, whichever, you know, whatever basis as I said, the index is created, has an impact on the performance and, you know, what you see on your chart. And as I said, all sorts of, really, it sounds terribly complicated, but it's not. It's a little bit complex, but as I said, we will pull everything together in the program. Right, let's have a look at XLE, which is the energy sector. I have actually you can go over to ETF.com, and you can actually get all the stocks that are in this particular sector, XLE, and you can see, well, which is the best performing, which is the, and you know, you go back to FinViz, as I said, all the other sites that we looked at in previous webinars, and you can, you know, it's just another way of doing some research. And then we do the technical research as we've done, you know, is it what's the you know, what's the volume, what's the relative volume, etc. So we've got the technicals as well. I've actually got here, I've got the QQQ, which is the ETF for the Nasdaq. And if we have a quick look at the daily, because it, you know, we've got the same price action here that we had on the futures. David has got the futures, so I'll pass over to him when we've had a look at what the XLE is actually doing at the moment. And this is the candle, not quite so dramatic. It's just the way the ECF is constructed, the actual cash market and the futures candle pattern, you know, you will have the same values, etc. But this is what I mean. You had this, you've got this hammer candle, the volume underneath it. I mean, David will show you the volume on the futures. I wouldn't say it was hugely extreme. We had a nice big candle yesterday, but we had a slight fall off of volume yesterday. And today we've had a gap up, which is quite interesting. And we'll see whether that continues higher or whether that gap gets filled. And we go back to levels, and also what is the volume telling us on the y-axis, which is part of the volume point of control. Our volume point of control is this yellow line here, which is where we had the break. The initial, it was the break away in these down candles with a lot of volume. There's a post about it on my site, and it, you know, does look pretty bearish. There's a lot of volume under those down candles. It went through some very significant price-based support on the accumulation and distribution indicator, and then on Monday we just had this kind of really wild day when it fell very heavily, and you think, yeah, great, it was up in the morning in Globex, the futures, then it just completely reversed in the afternoon. It was a real schizophrenic trading day between Globex and the cash market, and you know, in the afternoon session, and which has left us with this deep wick candle. As a trader, as an investor, you know, your time horizon is much longer, and it's a very difficult time at the moment, because, you know, markets have been at all-time highs. We've had the Santa rally, everything. We've got all this, you know, the inflation behind us, etc. You know, it's very difficult to know what to do. We also have what's called the January effect, and that is there's a lot of selling for there's been a lot of selling, there's been a lot of buying, a lot of selling, but there's a lot of selling, I believe, for tax reasons. So, and money comes into the market on in January anyway. You know, one of our early mentors and teachers always used to say, you have to remember in the markets, you know, there are fund managers, asset managers, they have wheelbarrow fulls of money every week, and that money has to find a home, which is why we've had these markets of buy everything, but it can't carry, you know, nothing carries on forever. So as I said, this type of market is just the way it is. So as an investor, I do have a lot of sympathy, but as an investor, one of the ways to look at what is possibly going to happen in this year is to go back to sectors, see what was the, you know, what are the top stocks in the top, you know, maybe in the worst performing sector. Is that sector going to go high? Doesn't always happen, because as we saw with energy was bottom of the pile 18, 19 and 20, as it were, before it finally came good last year. But not all the stocks will be you know, performing. The key is to find the outperforming one. And, you know, we look at one of the ways you can find that not just from the fundamental perspective, but obviously is what the chart is telling you. Right, the QQQ, interesting. as a Nasdaq, it's really been in a consolidation phase around the volume point of control with a kind of slightly, I think, with a more of a bearish tone than a bullish tone. It's, you know, you can see the number of times it tried to break away and back to the volume point of control. This is volume and price over time. It's where an asset, a market is in a long and an extended consolidation phase, and it did eventually break away. What's interesting also, have a look at the volume here under these candles, where we have some really nice VPA, where you have rising prices, falling volume. That's VPA 101. That's, you know, that's it. Where's it going to go? Well, the volume point of control itself, it actually didn't quite make the volume resistance, because what the VPOC does, the indicator as a whole, not only does it tell you what this the most important area on this chart, you could call it the value zone. It's where the market is happy to transact in you know, backwards and forwards, but it has no clear direction. And in over the period of time, it then builds up what David calls transacted volume. But it also throws out support and resistance based on volume. These are these lines here. So you have the outermost at the top and the bottom, and within that we also have price-based support and resistance from the Camarilla pivots, and also the accumulation and distribution indicator for Ninja. Similar one on TradingView and TradeStation. In that, what happens is these lines can get thicker the more times they are tested and they hold. They will get thicker and thicker. And what's interesting today is the gap has taken it above the R3. The most important level is the third level. It's the kind of equivalent of the Fibonacci 0.618 level, which is you know, a lot of traders like to use. So that's the QQQ. I know David has got the Nasdaq. Just very quickly, XLE, which is the energy stock. Let's have a look and see what happens. See what's over there. And there we are. This is the daily chart, as I said. And again, it's we've had it in. This is the daily. We had a quite a long, you know, sideways price action, slightly away from the volume point of control. But look at this acts as support and resistance in its own right, both from, you know, on a volume base. But look at the depth, the strength that we have here on this blue accumulation and distribution, and how thick that line has become. So, you know, that tells us that it is a strong platform. So when the break did finally come, and we had some resistance here on volume, as I said, this was back, in fact, those of you who came along last year, we did keep looking at energy stocks. Energy stocks suddenly start, traditional energy stocks. I'm not talking new technology, electric vehicles. I'm just talking oil and gas, which, you know, are very politically incorrect these days. They put on a good performance, and this is why it is reflected in this particular sector. Where that's going to go at the moment, it's at the top part of the volume point of control. It's got to get through. It's a reasonable amount of volume under there, but it's a good way. So if you are trading an energy stock and it is in this particular sector, have the sector next to you. You know, what percentage of the sector does it represent? What's it doing? I haven't done this on this occasion, but certainly in future future webinars, I will look at the individual stocks in more details from the different sectors. It's just something I've started to do at the moment. What I would also like to highlight as well, we talked about the financials, and I haven't done real estate. We'll look at real estate maybe next time, but I just wanted my BTX. This is something I've been watching and watching. I think this is the ultimate patience trade, actually, because I don't think biotechnology has. I think healthcare and bio is sometime this year. Where is it? BTX. How come it hasn't turned up? Go away. No, it's still. It was a classic pump and dump. No, it's not going to. It's not going to play ball. But I just want to hopefully. Right. Yes. I thought this was the most beautiful VPA example. And I just want to draw your attention. This is obviously Robinhood from from its IPO. Another, as I said, nice pump and dump. It would have had, what did it go up to, $90? It would have been a volatility candle, even without the volatility trigger. The fact that you've got this massive wick to the top of the candle with a massive volume, you know that's only going to go one way, and it's been sliding lower really ever since, and all the attempts to rise have been, you know, pretty disastrous. And it's one of these stocks where we looked at and you think, right, well, at some point hopefully it will turn. Stocks can go to zero, clearly, but how do we know that? And I took one look at it because Robinhood was one that we kind of looked at when it was moving sideways, and we said, oh yeah, no, just leave it. No, it's got to find its own level, as it were, and it's here. You have two little down candles and this tiny little candle here, but look at the volume underneath it. David in the previous section said, if you wanted to define VPA, what is it? It is all the elements that we say, but it is actually spotting the anomalies. It's seeing the chart and thinking, that doesn't look right. That is not right. And, you know, despite what might be said in the press, despite what, you know, everything else, you look at it and you think that's not right. And this is one I'm going to keep an eye on just to see. It is one signal. That's all it is. It's gone from, I feel sorry for anyone who, you know, stuck up here at 90 and is down here at a 10. It went all the way down to, I think, 12 at one point. We'll see. We will see. But we will see what transpires. But it's just a beautiful example of the kind of anomalies that you can find, and you can find them in all time frames. Right, that's what. Don't forget, we're also into earnings season. If David lets me come, if we've got time, I'll come back later. I haven't mentioned them. I mentioned them a couple of times last year. Part of what we're also looking in the program, we're trying to bring in as much as possible that we feel that you need to be aware of. And one of the set of indicators, if you'd like to use, we look at market breadth, but market internals, if you've never used them before or you may not be familiar with, they basically the advancers and decliners line. It is the NYSE tick, and also its volume, but it's looking at the volume being split out between buying and selling. And I've been looking at that at these three indicators in more detail. They're like a sentiment indicator. Sentiment indicators, it tells you actually what is happening in the market. But one of the things I've noticed, what I've read about it and what I've watched on various videos of, you know, people who use them more regularly, is that in fact, if you understand volume price analysis and you can understand the relationship between the price action and just the simple up-down volume, they are fantastic confirmation signals. And I will put them up in another session, so I will show you exactly what I mean. But actually, if you just pick up the 1 minute chart, as I have here for the XLE, it's there. And I'm not saying you don't use them. Some traders like to use them because I think they like to use them because they may display the volume, the up-down volume, the very simple up-down volume on the chart, but they don't use it or they don't know how to use it. But as VPA traders, they're great as confirmation, but the signals are already there. And certainly with our tick speedometer here, it's not the same as the tick indicator. That's $TICK. This measures momentum. This indicator we have here. So when the activity, not momentum. So when we have green, we know there's been an uptick in activity, clearly, because we've got a nice big hammer candle, we've got some, you know, got a nice deep wick to it, which of itself is a strong candle. But what you want to see is, you know, you want some volume. I must say, I would have liked to see more volume under that one, under that candle. But you know, and the nice thing is it's now above. It's managed to get above the volume point of control, gone into red, because this is how markets move. You have bursts of activity, and this is what intraday traders try to capture. They try to capture those bursts of activity. Then everything quietens down. You know, it kind of takes a deep breath, steps back. Fine, is it going to go back up or is it going to reverse? That's pretty much, you know, what happens. And sometimes it pauses because it's waiting for an important piece of news. And what happens with indicators such as the volume point of control, such as you know, understanding chart structure, understanding consolidation phases, understanding how trends begin and where trends are likely to pause and why they're likely to pause, and chart patterns and candle patterns, you know, it just fleshes out the narrative that is going on in the chart. Right, if you've got any questions, please just pop them into the chat box. I will now pass you over to David. The question about the anomalies, it is all explained in the book. So, you know, but the first thing you have to see is this. Can you see the range of this candle? It's tiny. This one is tiny. This is even tinier. What is happening to the volume? The volume is increasing. If this was going to move lower, the spread of that candle should reflect the amount of volume that is underneath there. We're not seeing that. So that has to be buying there. It can't be all selling. You will have to see, let's have a look. It's quite it. Right, let's look at this one. This one here. You had 1, 2, 3. I don't think I can make it any bigger. There we are. Right. You had 1, 2, 3 candles here in this waterfall. You do have a wick to the bottom of this candle, but that is the volume underneath it. And you had the second candle. You had rising volume, slightly, you know, the candle's not much bigger than that one, but this one, you've got decent spread on that candle and you've got rising volume. You've got the exact opposite here. You've got 2 rising volumes here, then you've got the third volume bar and a really tiny little squishy candle. That is the anomaly. That is what you're looking for. You are looking for when things do not look right. As I said, if the books, the example books has a ton of these examples, and I'm sure David will have lots of anomaly examples on his charts. But thank you for the question. As I said, sometimes, you know, it's just, when I saw this, I thought it was just such a great example. And the reverse is also true. The reverse is also true. When you look in a pullback, you see this pullback here, these 3 little candles, and you look at the volume underneath it. They are, you know, they're quite okay, except they're quite squished, but the volume is very, very low. What you want to see is where you get this disconnect between the candle itself and the volume underneath it.
Hi everyone. Back on Ninja. I'm just going to move the chat box out of the way there. Yeah. I'll just move that up a little bit. Tidy that up. Let's move that up there. There we go. I'm on I've got the YM, the NQ, and the ES on the normal setup. This is on the daily at the bottom, and at the top I've got the 5-minute. And as you can see, for once, I have to say it's quite unusual to see all 3 of the indices moving in the same direction with roughly the same amount of momentum also. It's been very, very common over the last few years to see the NQ in particular has been leading the way, and leading the way both to the upside and the downside indeed. And that was certainly true the other day as well. But it's unusual to see all three, as I say, moving in, pretty much range-bound, really struggling at the moment. You can see the price action up here. We've got the volume point of control on all three is very much in evidence. You've got this, the attenuation in volume here, the falling away in volume is something you see anyway, because you're always going to get an inrush of volume when the cash markets open alongside the electronic. This is the electronic volume over here. And the point I always make to people is twofold. First of all, don't believe people who say you cannot trade Globex in isolation. It's very easy for us in the Northern Hemisphere because we have the prime markets are always comfortable for us. They're always during the day. So, we get to sleep. The Southern Hemisphere, it's not so much fun. So don't believe anyone who tells you that you cannot trade Globex in isolation, in other words, the electronic markets. This volume here is only, there's two reasons. First of all, this volume is only distorted by what's gone on here in the cash and the electronic, in the cash markets opening and what have you, and the news. So yes, it looks quite small, but actually if you took all this away, it would be perfectly demonstrable, perfectly tradable. The other point I always make about it is if you actually, and you can see it here, if you actually look at the spreads of the candles and the amount of volatility in here, just in this section here, this is where the cash market's open. This is cash and Globex running together. Look at the volume, look at the price spreads through here. This is through Asia, here we are, 6:30, 7:45, through night into where we are. This is our morning. So you look at the price action, it is much more straightforward. It is much more even paced. It lacks volatility. And the reason it lacks volatility is because the automated programs, that execute trades hundreds and hundreds of times a minute are not in here. As soon as the market's open, they've got liquidity. That is when they step in, the bots step in. This is absolutely filled with robots in here. That's what they're doing. They are taking tiny, tiny fragments of price out, but multiple times a minute. And that's what they do. And that's what this market is about. The ES in particular, the NQ less so, and the YM less even than that. This is the one, the ES, the derivative, the S&P 500, which takes a hammering. And that's why you get this huge increase in volume, huge increase in volatility, and a huge increase in spreading candles. And I make the point, it's just so obvious. So don't think if you're in the Southern Hemisphere that you can't trade quite happily on Globex. You can. I trade the electronic only a lot, and it is, I have to say, yes, it is. How can I put this? You're not going to make the money so quickly, but then equally, you're not going to lose it so fast either. If you get on a nice trend, as we are now, and you get a fast move to the downside with all this liquidity and volume in here, boy, oh boy, it moves fast and the revenue ramps up very, very quickly. Equally, if you get on the wrong side of it, you're going to lose it just as fast. You don't have that issue in Globex when it's trading. And the other point about Globex is that it picks up the news. It will pick up China news. It'll pick up Far East news. So you get the volatility from very much from a fundamental event. In other words, if you like, newsworthy events rather than volatility triggered through the algos swamping the market and trading accordingly. So, I make the point. You can see what's going on here. We're back into very, very thin price action. We've tried to rally, it's come off, and we've tried to rally here and it's come off as well. I promised earlier on, I think Anna mentioned earlier on about the multiple Renkos. I think I've got either the NQ or the, let's have a look what we got here. Here we are, they've got the NQ on here, okay. Now the beauty of, and you can see it here almost visually, the beauty of Renko is that if the markets are fast moving, and they are, and even more so to the downside, if you get a fast move to the downside, these charts will literally splurge on the screen. You can see it happening now visually. It's just a very, very unusual way to trade. What it gives you in this workspace is, first of all, you're trading on a momentum-based chart, which is what a non-time-based chart is all about. So these are Renko. So I've got a Renko here, set to match this time frame below at 15 second. This one is set to match the 30 second. This one is set to match the 1 minute. So this is a very, very fast time. This is out and out scalping, no question about it. They're set up in the same way in the sense that you've got the trend monitor above and below. And all I've done is literally match this to the time frame. So this is on 15 second. You match it to your time frame, and this will automatically, this is the Renko optimizer, it will automatically calculate and deliver the box size. And what it's saying for this one at the moment, in this period of the price action, it's saying this is a unit of 5. And that is basically 5 of the smallest units which are tradable. Now on NQ, it's tick, on ES, it's tick. So basically what we're looking at in terms of each brick there is 1 1/4 points, if you like, 5 ticks. If you move over to the 30-second equivalent, that is delivering 9 ticks at the moment, so that's just under 2 points per brick here. And then finally over to the 1 minute here, that's currently running at 12. So we are looking at 3 full points there, in other words, 12 ticks. And in matching it in this way, you get the advantage of trading a momentum-based chart, which is above, and below you've got the opportunity to read volume and price. So you have the best of everything. You've also got the trend monitors on here. And the other point about is that I mentioned in the Forex room about the speed of change, the rate of the look back periods on the currency array and on the currency matrix. The trend monitor is the one that takes a more considered view of price, while the trend dots here, you can see them on here, they move very quickly to the price action. So the first ones that will change will be the trend dots themselves. They'll move into gray. They'll change from blue to red very quickly because they are very close to the price action. Whereas a trend monitor will take a more considered view. And again, you have it in multiple timeframes in this way. So you're seeing a lot of choppy price action at the moment because we're trading around the volume point of control. Certainly in terms of this particular chart, let's have a look at the 30 seconds, see where we are on the 30 second there, being this really nice move lower. Now we're starting to see it come to a pause point again. Are we going to see a rally? The question of seeing what the volume does here as far as the trend monitor is concerned, that's still saying we're still bearish here. We haven't actually transitioned. We haven't seen any transitional colors come in here yet. We've seen a little bit of a flip-flop here, but nothing much to mention. If this starts to rally, maybe gets up to this sort of level, we might start to see that transition through into red. But at the moment, as you can see at the bottom, this is just starting to transition. And what you're seeing on the 15 second now is very typical. Your fastest chart will always transition first. It will always be the first to change. And you can see it here. We had the nice downtrend. We had a little bit of a transitional color here as we went into this pause phase. Then we carried on with the price waterfall, another little bit of a pause, volume falling away. We've carried on down again. Then we've got some buying coming in here, a little bit of congestion here, nice narrow spread candle, high volume there, and on up we go. Now we've gone up through the VPOC. If we're going to carry on upwards, this area here is actually crucial because it's a low volume node, which means that the price action should move through there with little effort, because volume and price-based support and resistance work in exactly the same way from a support and resistance perspective. If you've got heavy volumes of area of concentration like this area here, then for the price to drive through that is going to take more effort. The price to drive through these low volume nodes is going to take less effort. So when the price is approaching these, they're always crucial. For example, if we get up to this level here, and we start to break out to the upside, there's very little volume up here. So the price moving up through there should be relatively straightforward. It shouldn't require so much effort down here to drive it through there. So what are we seeing on the 30 second? Little bit of transition coming in, no surprise because we're seeing a little bit of a pause point, but we're still, we're going to come out the other side. Yeah, we're still back into bearish at the moment. Doesn't look like we're going to come out into full bullish for the time being. And up onto the 1 minute. On the 1 minute, we've seen no change at all. And that's what you expect because, as I say, every change starts with your fastest time frame. It's a ripple effect. It's the analogy I've used thousands of times is throwing a pebble into a pond. You throw it into the pond and the ripples move out from the place where it lands. It's exactly the same here. Your changes in trend, if they are true changes in trend, will start in your fastest, they'll ripple into the next one, on into a slightly slower one, right the way down the channel until it's a complete reversal across your particular time horizon. You can see the rise here again. You know, the volume is not terrifically strong, pushing that up. It's fallen away again, so it looks as though it's another, you know, false dawn in terms of whether we're actually going to see a momentum in the rally and strength in the rally. It's really lacking. It's lacking strength. It's lacking, what's the word? Not confirmation, commitment. It's lacking commitment to actually drive higher. It's trying to rally, but it's weak all the time. Let's just go on to the dollar was falling away strongly. I'm just going to hop up onto currency futures for a minute. There we go. Do you remember I said earlier on, you know, the Aussie can stay up here. Currencies can stay overbought and oversold for an awful long time, longer than you think they might. You know, the dollar is still crushed down here. I think I've got it on, that's Apple. That's, where are we? Let's have a look. So one of these I've got. Just finding it. There we go. Right, this is on the dollar index, so this is on 5. So that's what's happening in terms of the dollar. It's still very, very weak on the dollar. So we're still seeing that rally going on, particularly in terms of, this is the 6A, so this is Aussie dollar. 6B, pounds come off a little bit. Let's just pop that up to congestion, trading around the volume point of control on 5. The CAD dollar, they're inverse, not the dollar CAD, that's the CAD dollar because we are on futures here. 6E gone into a pause. 6J, this is dollar, this is yen dollar. Got a nice congestion. We've got a nice volatility trigger there. Lots of volume coming in. Either congestion or a reversal. That's what you're expecting. If you don't get it, fine. Doesn't matter. As I say, if you've got a train, you're in a position and the volatility is triggered, because this will trigger in real time. These little arrows at top and bottom will come in real time, which is a huge, huge benefit. This is a 5-minute chart. Now, they might have come in 1 minute, they might have come in 2 minutes, which gives you 3 minutes breathing space. Not so important if you're on a 15-second or 30-second chart, but hugely significant if you're on a 5-minute, 10 or 15-minute and you get one, because you've just got that heads up. You make the decision, okay, I've got volatility, I'm closing out, take most of the position off the table, if not all of it, sit tight, wait for it to happen. If this is going to carry on higher, if we're going to break through here and get above this, fine, you just jump back in again. But at least you haven't sat through all this, or worse, a full-blown reversal back down there. And that's what it's about. So the indicator, remember, the indicator triggers in real time. You don't have to wait for the close of the candle. It will trigger before the candle closes. As soon as that metric of reaching, achieving the ATR setting, the average true range, in other words, prices moved outside the average true range for that particular instrument, that particular time frame, it will trigger. And at that point, you know that you are in a volatility candle, and therefore to expect one of two things, as I say, either congestion or a full-blown reversal. Very bullish, you can see. A little bit of change in trend monitor coming in here. It's a bit spotty over here, but pretty solid down here on 6E, 6J, and 6N. Let's go back on to the, let's get a quick look at Tesla, one of my favorites over here. You can always guarantee, or generally, I say always, you can't always in trading, but generally you can guarantee on something going on in Tesla and something tradable, certainly from an intraday perspective at any rate. This is on 1 minute, 2 minute, 3 minute, and this is the daily chart for Tesla, which we've written about extensively on Anna's site. Excuse me. Back at the volume point of control, it's been trading sideways for a long, long time now. We highlighted the trap moves way back over here. We got hammered for it. We said that Tesla was setting up some weakness, and we got slaughtered for it on social media. But then, you know, our shoulders are broad, so we're quite used to it now. And the other point I made, I think Anna made in one of the posts, yeah, it was actually yesterday or the day before even. This, when you look at anomalies, you're looking at all sorts of anomalies. You're looking at, as I mentioned in the Forex webinar, you're looking at anomalies not only from price and volume perspective, but also anomalous price action when you get gaps. And this was an absolute classic. When you, I'll just move the chat box out of the way. When you look at Tesla, which gapped from, where are we, I don't know, 1080 or something, up to 1150, and then went up over 1200. And you look at the volume associated with that, I mean, that's clearly anomalous. It's ridiculous. How on earth would you expect that magnitude of gap followed by that amount of price action, taking the stock almost $150 per share higher on this amount of volume? It makes absolutely no sense at all. And when you look at it in comparison with other volume bars in here, even down candles, you know, this is the sort of volume you're seeing heavy selling under a widespread candle like that. Even this gapped up move here, you know, good volume, gap up move, okay, fine. You know, that looks reasonable. If you compare that with this, it looks totally unreasonable and unsustainable. So what are you expecting as a result of that? You are expecting that gap to be filled. Gaps don't always be filled, but it is, you know, it's one of the truisms of trading. It is often the case purely because gaps are created by the market makers in drawing you into a move through the fear of missing out, FOMO. It's the speed of price. The price will jump. You'll see a gap develop. The price will continue. You'll want to jump in before the price starts to lose momentum, and then you're trapped. The jaws are closed on the trap, and that's it. You're caught. And you know that you can imagine how many traders, intraday traders, would have seen this, because they are. The other thing about the stock market, which obviously you know is unique to the stock market, is that it has this bias. It has this bullish bias all the time, and it always makes us laugh when you see these pictures of traders. You know, when the markets are really selling off hard, and you see pictures of traders with their heads in their hands to denote the fact that the markets are weak and very bearish. And we always wonder why, because if you're selling in a downtrend market, you make an awful lot more money more quickly than you ever do in an uptrend. So it just makes us laugh, but that's the nature of the stock market. It's always perceived as bullish. A lot of traders only consider the bullish side of it. They never trade the bearish side at all. And that's why it's such an easy move. Gap up, trap, bang, back down again. It's so simple, and they make so much money doing it, but it's all revealed through volume. This is anomalous. It's an anomaly between the volume and the associated price action. In other words, effort and result are just out of balance. It makes no sense. So yes, a lot of the time you're looking at the candle and the volume. You know, is it in agreement? Is it in disagreement? If it's in disagreement, what is it telling me? But you also look at it in terms of gaps and other price formations on the charts as well. Combinations of candles, combination of volume, all sorts of things all the time. You know, but that was just a classic on Tesla. Having said Tesla normally delivers, it's not delivering much at the moment. So there we go. Let's just go back and see what's happening on the main indices. Just have a quick flick on oil. Still bullish on oil. This is we're on the February contract now already. Looking for oil to move back up to 84, 85, where we had it before. That's where it topped out before. That is key now. And if it gets up to anywhere beyond 83, I know we've got oil inventories. I'm not sure whether they've come out again already. I think they might have done. But if we get up to 83, 83.50, $84 a barrel, if we can get through that level, then you know we're going a lot higher, up towards $90 and probably beyond in the longer term. So that's where we are on oil. Let's just hop into gold as well. Gold is going to have another run up. It's at 824 at the moment. Just flick up the daily. Here we are. Minor resistance here. This is on the accumulation distribution indicator, which works exactly the same way as on, sorry, just adjust the time and sales, just drop that out for a minute. Here we are. This is on, excuse me, voice is going. This is on Apple. But the indicator works in exactly the same way. Just pop this up full size. You get these very, very strong demonstrable levels. Basically what the indicator is doing, it is calculating every time a level is hit and becomes either support or resistance, it then counts that as one and it thickens the line accordingly. And then the numbers down the side here alongside actually indicate directly to you that this level has been touched 8 times and been supportive, this level 2, the same sort of thing. And it then paints the level accordingly. So you get this great visual picture. So you've got 2 down here, okay, it's a fairly minor level. When you get 2 levels like this, one, on their own, they're very strong, but put them together as a cluster, hugely strong, this level here. So if you're looking at that from a retracement in terms of Apple on a 5-minute time frame, which we are here, then you know for this to come down here, this is going to be a massive platform of support for the stock. to bounce back off that particular retracement now. And it works in exactly the same way, as I say, on TradingView. It's how we developed it, but originally we developed it on NinjaTrader, as you see it here. The numbers are not quite so clear here, but that's a 6, this is 2, 1, so on and so forth. So we've got a little level here on gold, not particularly strong. The key thing with gold now, as I mentioned earlier on, with regard when you look at the volume histogram on the VPOC, this area here, this is very low. We've got a nice low volume node in here between 35 up to 45 odd, but the volume here is relatively light. So hopefully we will get another run up through. We are bullish on gold. Hopefully we'll get another run up through here. If we get through here, should go through here fairly easily. And what we're looking for is to get through this region. We thought we were going to get up to $1,900 an ounce and beyond. It failed and it rolled over, and we had this price waterfall come in. We're going to see what happens. As I say, this level here is key in terms of what happens next for gold futures. Let's pop the time and sales back up. If you're wondering what this is down the left-hand side, this is purely times and sales. This is actual contracts. This is not a price ladder. This is not spoof. These are actual physical gold futures contracts going through the market, trading live at the moment. And what you're looking for here is you're looking for big numbers. These 1s and 2s I'm not interested in. We'll do a lot more on time and sales over the stock program. And I have to say the stock program is about trading and investing. It's a massive section on options as well, which is all part and parcel. Whether you want to trade direct into the market as an investor, whether you want to trade indirect through all the various channels you have of indirect instruments, it's all going to be covered in there. And also we're doing live webinars on it too as well. But this is time and sales. This is real orders going through. Let's say 1s and 2s down here. What you're looking for are really some big numbers. You're looking any big double number figures. So 30, 20, 30s, 40s. And if you get any triples go through here, it's massively significant. And what you're looking for is how the market then absorbs that price and how it reacts to it, what it actually does. Does it jump? Does it collapse? What does it do? Go sideways? Has it absorbed that huge quantity into the market without any difficulty? Has it knocked the market back? All those sorts of things. Just finally, just go back onto the indices again before we wrap up. Let's have a look at the multiples. There we are. All looking a little bit weak at the moment, very sideways, lots of congestion. Volume point of control in evidence on all 3 time frames, on all 3 indices now. No great surprise. It's tradable, but you've got to be very light on your feet, very quick. These little price waterfalls, fine if you want to trade that. If not, it's best to stay out, wait, bide your time. Wait for a day when you get some stronger price action rather than this relative weakness that's showing at the moment. Market really isn't going anywhere strongly for the time being, certainly on an intraday basis at any rate. So there we go. Let's just head over, just show you where all the bits and pieces are. You'll find all the indicators at quantumtrading.com. As I said this morning, whatever you buy from us, whether it's one indicator or a bundle of indicators, and whenever we have customers going back 10 years, more than that, 11 years, and they come back to us and we will credit you for whatever it is you've bought in the past. You can upgrade to a bundle, you can upgrade to a full package. And remember, with the full package, if you invest in a full package with us on any of these platforms, you will get all future indicators free of charge. Customers who've been with us from the start, it's just our way of saying thank you. Customers who've been with us start have had goodness knows how many indicators free. They're just added to your trading dashboard. It's as simple as that. The license on MT405 covers both platforms. You switch between the two, the same on 7 and 8, so it's just one license. TradingView, hugely popular at the moment, and TradeStation as well too. So that's where all the indicators are, fully supported, and you get 24/7 support and all future upgrades. You never pay anything else. All future upgrades are included in the cost of any indicator. And we have a 7-day money-back guarantee as well, so you get to try them as well. This is where you'll find Coulling.com, all the books up on Amazon, both in Kindle and in paperback. Hugely popular, I have to say, very humbling. A lot of comments up there about how it's changed traders' lives, and they've come to understand volume, and it's helped them enormously. Not just volume on its own, people with existing strategies. A lot of people who use Elliott Wave, for example, have found it hugely helpful. It's kind of whereas before they were trading maybe with a 70% view of the market, volume gives them that 100% view. Similar with Fibonacci, all these sorts of technology, all these sorts of strategies. Volume gives you the inside track. It reveals what is actually going on, the truth behind the numbers, if you will. And that's the Forex education program. And you might think it's odd that they were showing this on a stock trading webinar, but I can assure you we have a lot of stock traders on here now, and we have a lot of index traders, futures traders as well. And the reason for that is because traders are starting to understand that the Forex market sits at the heart of everything. Because if you think about it logically, sentiment is all about risk on, risk off. And what does that involve? Well, it involves selling one asset and buying another. What does that involve? It means transferring one asset into cash and then back into another asset. So the Forex market is the gateway through all this cash. Is constantly sloshing backwards and forwards as risk appetite transfers from one to the other, from risk on to risk off. And that is why the Forex program is so popular. That's why it's at the center of the Forex world, sits at the center of it. It's the hub of everything. So whatever else you learn in this business, if you learn the Forex market and understand the Forex market, it'll be hugely beneficial, whether you're a stock trader, whether you're a commodities trader, whether you're a futures trader, whether you're a bond trader, whatever it is all about the Forex market. We added the Funded program in. It allows our students to not only leverage the knowledge that they gain in the Forex education program, but it also gives them the opportunity to trade much, much larger sums. It's our money. You start at 15,000. These are the evaluation levels you start at. You can choose your own. You start at 5, 10, or 15. It's your choice. There is an entry fee. You pay a one-off fee. That's it. No, you can't lose any more. Yes, it's all governed by risk and money management rules, as you expect. You're trading our money. We'd rather you didn't lose too much of it. But that's where you start. And once you've achieved the profit targets that we lay out on each level, if you start at 15, then once you've hit that profit target, then you move up to the next level. We give you 60,000 to trade, and thereafter we double it. So it goes 122, 44, 80, right the way through to 2 million. You start on Forex with the 28 spot Forex pairs in the evaluation. You are looking for consistency. We are looking at you for consistency as well. But once you're through that level onto the portfolio manager level, you trade all the indices too, plus gold. So it really broadens out in terms of what you can trade. As I say, it's our money, and you trade much, much larger accounts, but it's all explained there on that particular site. So there we go. Just make sure we haven't got any questions. Yeah, if you can find it on, if you look for Anna's name, Ashwini, on Amazon, if you just go and look at annacoulling.com, you will find all her books listed up on Amazon. I can't remember the exact, in fact, I can show you the book up here. Where are we? It's this one. Stock trading and investing using volume price analysis, over 200 worked examples. That's the one, but you'll find them all up there. If you just type Anna's name, and you'll find them all on Amazon. You can buy through here or up on Amazon Direct. Either is fine. That's it. I'm done. Thank you very much indeed for coming along today. I hope you've enjoyed today. I hope you found it useful. Hope you found maybe learned something you didn't know before. We will be back probably next week. Similar sort of format, I think. So I hope you've enjoyed it. Thanks for coming along today. Enjoy the rest of trading day and the rest of trading week. See you soon, and bye for now.